really what makes our program special, I mean, this is kind of the difference maker between us and all of the other companies that are out there, is that we look for a divestiture at the end within 3 to 5 years. And this is where we're targeting a 2.3x when we do divest and sell those assets. But I know on this, I really want to just stick to the tax portion of it. I did want to kind of describe the full part, but so that brings me to right here, which is kind of gives a little bit more detail on how the tax benefit works. So just an example, like for instance, with Vinny on a $200,000 investment, you're able to reduce 150. Now we use a deduction factor of 75% because in 26 years, we've never not hit this target. But we have averaged 85% the last 3 years. So I typically like to tell investors 80 to 90, or I'm sorry, yeah, 80 to 90% is where you can aim for. And if you are in the highest tax bracket, that gives you about a 30% return right from the get-go, or allows you to save roughly $60,000 against active income, which there really, I mean, Vinny, you can attest, there really isn't anything out there in the market that does that.
That really got my attention, to be truthful. I mentioned it that I had minus 9 million in cost segregations and negative
Mhm.
depreciation accumulated all over the years, and lots of W2 people, directors, business people, doctors, lots of great clients and investors. They really are looking for active loss. And what really impressed me was this was active loss, not passive loss. And that's exciting. That's really, really what people are waiting for in December, as 31st of December. If they are not able to take some kind of investment which will give them this deduction, they have to pay taxes. There's nothing against it. So the key thing I liked about this was that it's a 200 plus years of experience. And maybe, Michael, you want to kind of go over, maybe even if you have the Permian Basin, you were
Oh,
sharing. Now,
absolutely.
please go ahead. Sure.
Oh yeah. So to kind of go over the projects, so to get into a little bit more detail here. So we are focused a majority in the Permian Basin right here. We have 3 properties, but one of our bigger projects that we're very excited about is in Bivens Ranch. And I don't know if any of you have heard of the Bivens. They're Texas royalty. I mean, they used to be the largest ranchers in all of Texas, and since the 1980s, they have been leasing out their mineral rights to drill. Now,
Mhm.
what's really special about this property is it has over 60,000 contiguous acres, which is massive. I mean, we have around 120 available drilling locations. And with our model, ADD, acquire, develop, divest, we're only looking to develop about 5 to 10% of the available drilling locations, really prove up the reserves that are currently there, and then divest the asset. The other part I really like to talk to about Bivens is the formation is called a Bakken lookalike. And what the Bakken is it is the famous formation in North Dakota that we've been drilling for the last 10 years. And the reason that's important is just about every geologist, engineer, as well as landman is very familiar with the Bakken. They know it has a large pay zone and they know how to drill that particular formation, which is very important. The other 3 properties that we have are right here in the heart of the Permian Basin.